Hey everybody, good morning. Let's see, we got Don, Craig, Fred, Arturo, Rob, Ed, Sledge, Svenborn. Good to see everybody. Ted, good to see you, good to see you. And I thought I'd talk about the kind of implications, ramifications of the upcoming potential rate cut or not rate cut and what the options market's kind of telling us about it. How's that sound to you? Sound like a plan? I mean, it's kind of what I was like, should I dive more into the GPU, TPU thing? Or I bet you people would like what we can expect as we go into the next couple weeks. That was where I leaned. You can let me know if it was a good lean or a bad lean. You can vote. But I've already got the monologue made with the options, implications, and it's kind of a mixed market. So I'm trying to get my windows in order. I brought a couple images to share with y'all after I talk about the options. So, it's kind of a mixed signal of this rate cut. We've seen the rate cut odds going higher. We've seen them going lower. And the market right now reminds me kind of a first date story, might be sitting across from the person. They're saying all the right things. Oh, you're smart. I love your portfolio. I see a bright future. But their body language may be telling a little bit different story. They're kind of fidgeting. They're checking their phone. They're not really making eye contact, darting around the room, looking for that escape route. You kind of get those mixed signals. And you don't know whether this is going to go good or maybe you should run for the hills. Well, that's the stock market right here in 2025, in November of 2025. In fact, on one hand, we had the Federal Reserve whispering sweet nothings in our ear, a December rate cut, it looks so good, more and more of a sure thing. The CME Fed Watch tool, which is basically the market's magic 8-ball, is given an 80% chance we're going to see a rate cut. And we've even had Fed governors like Christopher Waller and Mary Daly come out and say, it's pretty much seems appropriate. It's kind of like the Fed literally handing us a box of chocolates and a dozen roses and saying, come on, come to me. So what's the problem here, though? The problem is the market's body language. This is the market, right? Fed, kind of the economy. The market's a little bit different. The body language of the market, and I mean the options market in particular. Now, while the Fed is whispering sweet nothings, everything's going to be great, we're going to increase liquidity, the options traders, well, it's kind of been extreme fear. It's been like, get me out of here, right? So, first off, let's talk about the Russell 2000. The IWM is the ETF for it. This is an index of small cap stocks, the little guys, the up and comers potentially, the companies that are actually most sensitive to rate cuts. Why? Because they're not like big tech giants with mountains of cash and, 75% margins like Nvidia. They have to borrow money to be able to grow and expand and hire. So when interest rates go down, it's a shot of adrenaline for that business. Their borrowing costs go down, their profits go up, their stock prices theoretically should follow, maybe. But here's the crazy part. Even with an 80% chance of a rate cut, the options market for the IWM is kind of flashing a bright red warning light. We're seeing a massive amount of put buying. For those of you who are new to this, a put option is basically a bet that the stock's going to go down. And in the case of IWM, that's a whole index of stocks. And we're not just talking about a little bit of put buying. We're talking about a 94th percentile skew. 94th percentile skew. That's basically 2 standard deviations. Just shy of it. That's like the entire options market for IWM screaming from the rooftops that they think small caps are about to take a nosedive into the pavement. It's a warning sign. So what gives? Why is this market so kind of schizophrenic? Why are we seeing the Fed saying everything's rosy while us humans, us traders that are actually out here kind of doing something different. It's kind of like the teenager who says they're doing fine and then walks on down the hall and slams the door to their bedroom. Well, here's the secret for the market. The options market is forward-looking. I mean, we have to pick an expiration. We have to pick direction. We have to pick strikes. We have to place our bets. And it's not just looking at the December 10th FOMC meeting. It's potentially looking at a potential for a jump scare, right? A jump risk, actually. A surprise. What if the Fed doesn't cut? What if they say something hawkish? What if Jerome Powell kind of talks about how weak everything is once again in his speech? What if the economic data that's all been delayed by the government shutdown comes out and it's a complete crap show? Shiz show, you know? Welcome to the shiz show. And the options traders are hedging their bets. We're talking about a honey, sugar, iced tea show of epic proportions, right? So put buyers buying insurance because everybody else is buying insurance. The price of insurance, the options, well, if we get a big down, might actually be kind of cheap. And that, my friends, is where the opportunity lies. If everybody's betting on a fire and you're pretty sure it's not going to happen, you could make really good money on betting no fire. The Spot Gamma article that inspired this monologue here put it perfectly. Given that traders may be overly hedged to the downside for names such as IWM or call, so calls or call spreads might be the best way to capitalize on the what is cheap upside premium right now. In plain English, this kind of goes along with what I say all the time. If everybody's betting the house is going to burn down and they're 94% sure, you might want to consider buying a ticket to the housewarming party. Invite some friends. A call option is a bet that the stock, in this case IWM, the index, is going to go up. And if the market is wrong, which when everybody bets the same way, we tend to do, when everybody's zigging, we tend to zag. If the rate cut happens, the small caps rally, those in call options could be sitting pretty. Some call options could be worth quite a bit of money. Now, I'm not telling you to go out and sell the wife, sell the kids, mortgage the house, bet the farm on IWM calls. I mean, that's probably a horrible idea. I'm just a guy on YouTube with a microphone, a healthy dose of sarcasm, and get lucky here and there. But I am telling you to pay attention. Watch the volatility skew. Watch for open interest. These are the kind of the tells right here. When everybody's betting on the same thing, we tend to do the other thing. If this bearish positioning has to unwind as we get close to the FOMC meeting, maybe because we get a little rally into it, well, we'll see what happens. I mean, we could take a dip. It's kind of funny that way. Because this market of mixed signals and schizophrenia and teenage angst, I mean, there's always a story being told. If you can read between the lines, if you can kind of keep up with the flow, you can see opportunity in the contradiction. You can see opportunity where others aren't looking. You might be able to make some money, or maybe you could just end up with a restraining order. It's crazy, right? It's schizophrenia. Anyway, it's a fine line. It's a fine line. You can end up with a busted account. Keep your risk in check. And, the options market's kind of telling us things might get a little crazy in the next couple weeks. Might get a little crazy. So, as always, be careful out there. And all trading involves a substantial risk of loss. Past performance not necessarily indicative of future results. I make predictions, right? I make predictions every single day. Sometimes I get lucky. Sometimes I don't. This presentation intended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling any financial instrument, including stocks, options, bonds, forex, futures, cryptos, treasuries. Be careful out there. Tomorrow is a market holiday. The market is closed for U.S. Thanksgiving tomorrow. So today is the last full regular day of the week for trading. Tomorrow is a half day, close at 1 p.m. Eastern time. That's 3 hours. We're losing 3 hours off the market tomorrow. So if you got things that need to be moved by Friday OPEX, if you got options expiring, remember 1 p.m. Might want to take care of it today. Right there. Now, a few people have been asking about, like, JT, what about your gold rush trade that you put on Wednesday afternoon? So, close on Thursday, that's no opportunity to make money. Half day Friday, another sketchy day. Maybe it's not the best day to put that trade on. Now, I don't know if it's going to kick off or not till this afternoon. So it's just one of those things to be aware of. If we don't have, usually we've got all of Thursday trading, all of Friday trading, and then in the Monday. But if we're missing like 1.5, it's like now you're down to like a day to possibly be right. Usually we're counting on 3 days, so maybe not the best idea, right? At least 2.5 open days, or 2.25. Take 1.5 out of that, not left with much. It's just 3/4 of a day to be right. Anyway, I digress. So here's how I've been doing this month. Pretty good month. Real profit and loss. You can see this includes the trades from yesterday right there. This is not like I took this a while ago. This has yesterday's trades in it right there. Year to date, booked profit. There you go. It's my 50K challenge account. Go look at it over here. And pop it up. So the options market counts it a little different, or this tool counts it a little different than the way Robinhood accounts for realized profit and loss. So I'm just throwing that out there. So when you look at my Robinhood account says almost 35,000, and this says a little over 36,000. The difference there is in how they account for closed positions. And this one only showing 6,000 in the month profit. So that just goes to show you, right there, like the difference between the accounting. These guys count closed positions different than these guys. Net on net, not doing too shabby this month. Having a better month. Needed to keep going up. There, I apparently wasn't refreshed. So there we go. We got a $500 difference, roughly, almost $600. 6460 versus 77,000. So the goal of this challenge that I'm doing here is to build this 1 month into a 50K profit that's consistent. When you look at this, it's fairly consistent. Got a few bumps, a few dips. I want to have it consistent at 50K. Got a ways to go. Not there yet. Keep tuning in. Stay tuned. Get there eventually. Not today. So keep it on that path. If you want to keep up to date on it, you can follow me on KInfo right there. Talk about it regularly on the show here. I did a trade yesterday during Market Master on HPQ. Sold the 22. Strike put right down here. Collected 14 cents for it. Had to put up $2,200 in collateral, so that's $14. 2,200. Divide that out. Gonna have to grab the calculator because can't do that many decimals. $14. Not times. Clear, clear, clear. 14 divided by 2200, and that messed it up. Cool. 14 divided by 2200. Try it one more time. There we go. 0.6%. Now that had, I did it yesterday, so that was Wednesday, Thursday, Friday. Friday's expiration. That's 3 days, 3 calendar days to the expiration. So we divide by 3. Gets us a per day, 0.2% per day. Oh my gosh, that's horrible. Like, that's not very good. But when you multiply that out, if I can do this every day in the market, 77% return on that $2,200. That's not so bad. Not so bad. So I do these kind of trades over and over and over. And that's kind of the heartbeat of this right here. And that's why when you look at the profit, you look at the last couple months, it just goes up, goes up, goes up, up and to the right. Look at this year. Steady climb. That's how I do it. Small, little, repeatable gains over and over and over and over and over and over. I had the zoom option right here. Booked it out. $50. Sold it on the 24th, closed it on the 25th. Boom. Basically did the same thing on HPQ. That one should close out today. So not so horrible, right? Not so horrible. Dun, 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 dun. Yeah, stuck. So stuck with Kimberly forever, as she says. I always say I'm not stuck with her, but she's always like, "You're stuck with me now." Anyway, now that she's gone, talk about her. Anyway, what we got cooking? Took that trade. I do those NDX spreads pretty much every day because they have a 99.7% chance to work out. 99.7. Think about that. You do something 99.7% likely to work out. You're only at risk for like 2 hours. There's 250 trading days a year. If you could do this every day, 0.997. That means 249 and a quarter of the days are going to work out in your favor. So one day a year, you might have a problem. Might have a problem. You know what historically those days are that cause problems for that kind of trade are FOMC days. And days like October 10th, where it was just down, down, down. 1:30 p.m. comes along, and there's no support in sight. And I should have been smarter and realized that, but I didn't do all the numbers until after October 10th and realized that's a day to avoid. Don't sell premium on a day like that. Or if you are, go for a bigger downside and a smaller payday. That's the crazy thing. When you look at these NDX spreads I do, the gist of it, everybody's like, how do you do these? I've had several people asking. I post them on Twitter or X, whatever, every day. You roll down here. I usually go at 1:30 because that leaves me like 2.5 hours of the market open that I have to be right. Roll down here somewhere around the option that's like $2. Now, I also look at what's the current price? 25,170. I need to be 300 to 400 points down for optimal safety. But at the same time, the options market will tell you right here, if you're using a tool that does this, the percentage of profit. That means the likelihood this is going to end up out of the money. 99.5, which is basically 3 standard deviations. 99.7 is technically 3 standard deviations. So they're saying greater than 99.5. It doesn't calculate the decimals. But if you come in here and just try to sell that naked, I can't afford $2 million, right? I bet you can't afford per contract. So I dive in here, come down, cap the risk, cap the profit. 5,000 bucks. All right. Make 50 bucks on 5,000 bucks. Okay. Whew. Remember, we're only doing this at 1:30 p.m., so that's 2 hours. So you make 50 bucks on 5,000 bucks. It's 1%. Do that every day. We know we can't do it on every day, so we just multiply by 250. In a year, you can do 250% return. Well, this trade pays a lot higher than like HPQ or Zoom or any of those. You do this over and over. So this is actually a 250% annualized rate of return with a 99.7% chance to work out. Pretty slick. I think it's pretty slick. Anyway, we got a huge list today. Let's take a look at what's crapping and what's happening in the market. So we got a light day, pre-holiday. Market's trying to bust through the top. That's an initial signal. As long as we can stick it above here today. As long as we can stick above that, it's a signal we're going on up to that 7,000 area. 7,000 to 70, possibly 7,200 before we have bigger problems. Now, that doesn't mean we won't get another pullback along the way. We more than likely will. That could be coming up right in here. So be careful. NQ did not signal we're going higher yet. We are still below. So we need both the big indexes to be in agreement, and right now they're not. Not in agreement. If you have no idea what I'm looking at, you've never heard of ES, that's the S&P 500 futures. Why am I looking at it? Because the cash index doesn't have overnight action, right? We just gapped up. We don't have any, right? Well, it's kind of the same story, but again, you don't see all that consolidation right on top of here. You see we closed right at the line and then we gapped up. Missing data. Right here, you can see we kind of hit our head and we're actually off the high right here. Now, the caution that I have is if we don't hold that, we can come right back down to the bottom. And I want to see NQ go ahead and break on out. I need to see that get the continuation. And the NASDAQ, I've been talking about playing the NASDAQ options. We still got a ways to go to get back above this high. So this is an important level up here. We need to break on through to confirm we're possibly going on up. Now, this big correction back here could be done. Like we possibly finished it up. We hit the ideal target on the downside for an ABC. ABC right there. I'm going to edit the degree down a little bit. I don't like that one. Back. Come on now. Where's the one that I usually use? There it is. Minor. ABC. Now, that was perfect proportions for that. And can lead to a move higher. But we got to watch resistance. Look where it comes out. Look where that 618 comes out. Right there. It's a key level. Key level. In order to go higher again, new all-time highs on NASDAQ, got to get through that level. Got to get through that level. Even though it doesn't seem like it, we're sitting right at a 50% retrace from that high to that low. We're already 50% of the way back to the high. 618. Get through that. We're 75% likely to go on up here and make a new high. Not a bad bet right there. Now Russell. This was pretty interesting, I feel like. Yesterday, we were actually able to get above the 618. Here's the high, here's the low. That 618 level, we actually got above it. We're kind of confirming that we're probably going to go right on up here, 2600, right there. I actually have a call spread. I didn't close mine on IWM. I said back here a few days back, like the 18th, I think it was. I was like, I'm thinking that IWM could bounce pretty big. And I bought a call spread. I bought a 250. I sold a 260 above it. Right there. Looking for that bounce. Now, I bought it over here. It was up 100% yesterday, late in the day. 100% plus. That kind of gain is good for you. Close that thing. Book it. Move on. No reason to risk it for the biscuit. We could turn down and go lower low here. It's still very much in the cards. There's still all those puts on IWM. 94th percentile. That's kind of crazy. But if 94th percentile is wrong, target's right up here. 256, 259. Few points less than the Russell futures. RTY is the futures. Looking at the oil chart here. Flip back to the daily. Still churning the bottom here. This really looks like we're going to take a dive. Right down here. Been talking about that for, gosh, it feels like years now. This big target's been down here for a long time. A couple years. We started on this correction back here in March of 2022. And we're still not done, but we're getting close. If we could get a dip right down in here, high 40s, low 50s, we wrap this baby up, and oil might be able to go higher again. Gold still churning in here. I have two pathways. It looks like we're probably going to go on up here. So this may actually work out. If you get involved in the gold rush trade, might actually be able to take it up. Maybe, possibly. Nothing's guaranteed. If it does do the ABC right there, that's what we could be looking at. But this also, all the way up until we get a higher high, and that high right there can still be a 1, 2, and the 3 can put us down here. Very fast, like this kind of fast. Stay frosty, my friends. Stay frosty. Anybody took the accidental GLD trade last week? Almost to the profit target right there. Watch for it. Once we hit that 383.89, it was posted to my channel by a different guru. Once we hit that, trade's over. Bitcoin. Well, still working on this retrace. It's possible we come down here, but it's also possible we just make a lower low. So this can free up tomorrow when the U.S. market's closed. The futures market seems to push on Bitcoin quite a bit. But when the futures market closes, we tend to see Bitcoin makes freed up type of moves. So once this market closes today, we could see this thing pop down here and then pop up and build that bigger rally up in this zone. So watch out, more volatility, more than likely. We could be popping on Friday. We'll see what happens. ETH, yeah, same situation. We break down below the low, sign we have crypto winter. We break up, sign we're going all-time highs. It's kind of the same story we have. Pretty pivotal moment here in crypto. Like, are we going to confirm that this is a bottom of this move, bottom of this correction, and we go higher to a new all-time high, back above 126 for Bitcoin, or we're going to confirm that winter's here, winter's coming, and we're going to have probably, I'd say, like 10 more months of correction. This is how pivotal it is right here. This is probably 10 more months of correction on Bitcoin if we get below this low. It's probably what that's signaling. Is it possible we get a bounce in here to a lower high? And yeah, that's probably all going to happen if we confirm we're going down. If we confirm this is a bottom, probably going to shoot back new all-time high sometime in 2020, late 2025, early 2026. And then we'll probably do the crypto winter correction thing. Chill out. NKD potentially spiked that bottom and reversed. I like it. If we see this thing break back above 51,000 area, probably going on up. New highs, 53, 54, 55. That's global liquidity. Dollar here, sitting on the roadmap line. Resistance at the highs. Roadmap line support. Flip a coin. This is corrective type price action. We could see a deep retrace. If we get below 98.5, we're kind of indicating we may go lower low than this low we had back in September. Apple dumpling. What's crack-a-leckin'? Probably going to go on up. 284, 292. Those are the next step sides. Amazon coming up on some resistance here, that gap down, and then we have the 618. And if we turn down there, probably taking a bigger spill on Amazon. Google still gunning for that 337 level. Meta, this is looking pretty good. I might buy that supercharged ticker. Microsoft bounce up to the roadmap line. So this is where we either confirm that we're done by breaking back up through this, or we take one more leg down. Could be as low as down here. Could just be down just a little bit more at 454, 455, but we could take a bigger dip. Oh, making trades. Making trades. NVIDIA, tag the roadmap line. Is that done? Can't say for sure. 618's all the way up here. 195. Get above that, probably going new all-time highs. If we stay below it, probably taking another leg down. Tesla. So we've got the resistance, that 618 resistance at 435. We get up through it, probably going higher. If we stay below it, can make another leg lower, fully test into the roadmap line. That actually looks like the most likely scenario right now. Maybe something down around 380, 370. But if we get above this, confirms we're probably going on up. On up right now, probably 484, 500. And the bigger picture, got that 550 and 600 target up there. Netflix, probably going to keep consolidating here, post-split. I saw craziest posts yesterday about stock price matters more than market cap. I think traders are just caught in this, where splits, when you split and you take and divide the price by 10, psychology is this is dropping and it's going to continue to drop. So seems to be the psychology out there right now. And I see posts on X all the time about it. It's good, bad, or ugly. A lot of people have that misconception that, let's see if I can pull it over here. Hey, look at this. Talking about market cap, and it says irrelevant metric. Stock price is what counts. I mean, it's just, maybe it was comedy, maybe, but I see that so many times from people that aren't making a joke. They're being serious. So Gotta watch those things. Rolling it down, I've got 96 entries today, or I did. It's interesting that it didn't add them. Let's see, setups. Let's see if I can get them thrown over here. Daily charts. For whatever reason, it didn't. I know I copied them, but throw it on here. I'm going to go through these because 96 is a lot. You don't want to hang out. These are all potential trades for today, though. Some of them are probably going to be gold, absolute gold, with 96 of them out here. So, ADUS. Look at that. That's pretty good numbers right there. Pretty good. It may not be statistically significant, but it's pretty close. That one, 127. This is a big indication that the dip is done when there's 96 tickers on set up with the bounce right here. And a lot of stuff is going to be stuff you don't even recognize, like AN here, AutoNation. These aren't headline making type of things, but there's the entry. 235, 26, 84% of the time it does it. Profit factor 1.8, pretty good. Now, time frame. The 99.9 percentile is 7 months. So if you're going to play these with options, make sure you have time. Dollar below the low is always the stop. Those are the rules of the game. So low price stuff has a bigger risk reward, the bigger risk, smaller reward. Higher price stuff has a smaller risk and potential bigger reward. Right there you go, 35 on that one. Not great statistics. ASB. See what we got. Here's the high. Here's the low. Entry, 27.99. That one, smoking hot statistics. ATLC. I just picked up that little baby bounce right there for a 60 target. AVUV. Here's the high, here's the low. Entry, 103.82. Not great history yet. Not much history, I should say. 30 trades is a significant population on history. That one's just a real standard, like 33 trades, 75% of the time it works. 1.3, a little better than average. Right there's the target, 119.56. BOK Financial. Katie bar the door. Let's see, which one did you pick up? Yeah, that one right there, that high, this low. Here's the entry, 52 target. This did fail in here. No. Yeah, it did fail right there, failed. There's the fill. So that volatility in there caused a loss immediately. 34, 64, 6.8. This runs a little light. I don't know if I get involved in that one. Here's this one, CBRE. Let me know if you like these and you like the list. 175. CBU. I use this same pattern on all time frames. So these are slower trades, but flip it down to a 5-minute chart and find the same sort of setups. 150 candles, so if you're on a 5-minute time frame, 150 candles is the 99.9 percentile. So 5 minutes, 150. Do the math on that. Basically 720 minutes, or whatever it is, 750 minutes. 750 minutes. You need that kind of time frame if you're on a 5-minute chart. So your trade should be at least this long, and I'd probably round it out, maybe 1,000 minutes, so you don't run out of time. If you're trying to make money. If you're on a 1-minute time frame, go like at least 200, 300 minutes out. And that's how Triple Threat works. That's why it plays 0 days out until 1:30 p.m. and then it switches to the next day. Because at 1:30 you start running out of the potential time for it to work out 99% of the time. This one right here, looking for the 63.80 target. 30, 80, 1.8. Another smoking hot one. CCBG. Here's the high, here's the low, there's the entry. Looking for 45.69, 30, 60. Not as great. CCS. Here's the high, here's the low. I grabbed that high. Python grabbed that high, 67.92. Let's do a poll real quick. Start a poll. This one, I don't like the downtrend cooking here. Fired off under the roadmap line. Low price stuff. Extra careful. CNCB. Here's the high. Here's the low. There's the entry. 26.87. Yeah, fair statistics. CTOS. Here's the high. Here's the low. You can snap them on if you want and get your own numbers. $7 target. That's low price stuff. Anything under 20 is kind of sketchy. All right. Think about it this way. Under 20, sketchy. Why? Well, first off, $1. It's a 5% stop on something under 20. All right. Dollar below low, whatever it is, it's like at least 5%. It's already getting big. You know, on $100 stock, $1, it's 1%. Now, number two, institutional money doesn't typically play on stocks less than 20. I like to play where the big boys play. I like to just get a piece of what they're getting. Lots of scraps. Make a good living getting scraps. So be careful. Under 20. But that's possible. $7. Not great statistics though. CVGI. Downtrend. Not a big fan. But Python picked up that bounce right there. $1.99. Again, low price stuff. DFAS. Nice. Like this is a nice trend. Pullback. Potential continuation. 71.16. DFAT. Get the fat. DFAT. Here's the high. Here's the low. Entry. 60.60. DFSV. These are the same patterns I use for like HPQ. Right? How do I know where to get involved? Here's the entry. You know, this one kicked off an entry back here. Dipped down, lower low, but didn't go $1 below the low. Come back for a secondary entry. 33.46 target. DPST. Already have a target up there. Grab this lower high right there. Entry 107. DSTL. Here's the high, here's the low, there's the entry, and 58. ECL. Entry 285.47 targets. 53.69, 1.4. It's okay. ESML. Another nice uptrend. Look at that last pullback. Continuation. Pullback. Potential continuation. Really nice trend here. 47 target. ESQ. Another uptrend. Pullback. Continuation potential here. If you like low drama. 109.64. FCF. You just go after these. Oh, he grabbed the lower bounce right there because it went negative. My Python tool is much more aggressive finding these. I would wait for that entry on this one if I was going to take it. Pretty smoking numbers though. FFBC. And that one went more aggressive. I would wait for the entry. Close just a little bit higher above 25.50 and go for the 27.50 targets. First Horizon kicked off the entry right there. Could work out. 24.28. FLQM. Here's the high. Here's the low. Entry. 58.17. FNDA. First Horizon is used to be First Tennessee Bank. Local bank to Tennessee. I've known that bank my whole entire life. Never banked there though. 32.58 upside. Targets. GFF. Not a big fan of this pattern, but it picked up that high and this low. That entry. 80 target right there. And marginal statistics. Marginally good, but I mean marginal. Picked up this bounce probably. That high, this low, that entry. 26.17 target. HOV. I would go for the bigger bounce. Need to close above that 137 for 170. HWC. And there's the entry. 66.32. IJH. Here's the high. Here's the low. Entry. 66.98. JJ. You're like, where's this list? Where do you get this list? For my Term Trading Lab members, I produce this list every day, the day before. So I actually I have a tool that grabs this list every day right here, produces charts and everything, and statistics. Daily chart setups right there. This pops out every single day after the market closes, finds all the stuff that had a daily candle close above the 618. 134 potential on that one. IJK. Here's the high. Here's the low. There's the entry. 99.28. IJR. A lot of the same pattern right there. 123. IJS. These are all BlackRock's ETFs right here. 115. IJT. Here's the high, here's the low, there's the potential entry, 146. IWM. Kicking off the entry on the daily chart. Could take 7 months, but probably going to happen faster. 256 target. Already talked about that. IWN. Russell 2000 value. Here's the high. Here's the low. Entry 185. IWR. Mid cap Russells. Here's the high. Here's the low. There's the entry 98. You see, these are all pretty darn good right here. IWS. They're probably going to work out. Here's the high. Here's the low. There's the entry 142. JEPQ. And I might grab this as part of the double dip trades since we booked one yesterday. 59.60 target up there. Jets. Here's the high, here's the low, there's the entry, and 27 targets. JHMM. Here's the high, here's the low. 66 target. Jout it out. Oh, missed the low right there. 45.50 targets. JQUA. How do you know the statistics? Well, that's what I have the tool for. $64.18. Key site. This was on the list. This was top of the list yesterday. Or I guess that was Keys. Key Corp here. A little different. There's the entry. And 1990 target. KRE. Commercial. It's regional banks. Interesting to see this firing off here, actually. Here's the high, here's the low, there's the entry, and target is up there at 68.50. LAZ. Lazard. Yeah, grab that little pop right there. 53. I'd probably wait for the bigger bounce entry, and a 60 target. LE. Lean cattle. No, lands in. There's the entry, 1737. Not a great history on that one. LECO. That's a nice pullback right there. 254 target. Lincoln Electric Welders. MCB. Here's the high. Here's the low. There's the entry. And 83.90 target. MDY. Here's the high. Here's the low. There's the entry. 614 targets. MDYG. Here's the high. Here's the low. $94.55 target. Oh, yeah, $94.60 target. MDYV. Here's the high. Here's the low. Entry. Yeah, this one's already in it from back here, so 86 target. Yeah, this one's going for a little bit less target. 86 nonetheless. MPW. Here's the high. Here's the low. Entry. This one's close to the target and it's low price. Be careful. NUSC. Here's the high. Here's the low. Entry. 46 target. NVST. Here's the high. Here's the low. Entry. Target 22. OCFC. This one's in it from back here. Here's the high. Here's the secondary low. 1990 target. ONB. This one's in it from back here with a 24 target. New entry. With, did go lower low, but it didn't stop out. Coming back up. PFS. Here's the high. Here's the low. There's the entry. 2075. PRFC. Here's the high. Here's the low. 4730. PVH. I would wait for today's close and not target 92 up there. RRX. This one's been chopping a little bit. Did go lower low. Got the high, we got the low coming up, and 157 targets. I don't like the negative profit factor. RSP, I've been kind of looking for this one to go higher, quite honestly. Here's the high, here's the low, breaking above, target right up there at 193, which kind of puts us where the market could top out. RWJ, here's the high, here's the low, 50-30 targets. RYI. Here's the high, here's the low. 2520 target. SCHA. Here's the high, here's the low. 2917 target. SCHM. Here's the high, here's the low. 3050 target. There's lots of these. SDYV. High, low. Entry 3940. SYLG. High, low. Entry 9760. SYL. I've looked at all of these once upon a time. Every one of these on the list I've looked at, even though probably never heard of them. I built a list of 4,000 tickers and went through and did the statistics on every single one of them to put them on the list. And here's your target 92. Fair statistics, not this one. Re-entering worked out back here. Here's the high, here's the low. Entry 4392. SPHQ. Nice three-wave retrace. Right in the roadmap line. Bounce 7540 target. I would always go a couple pennies lower than the targets, just to guarantee my fill. And 4815. STRS. Here's the high. Here's the low. Entry. Target 2382. SVXY. Already bought some of this, but Here's the high, here's the low, entry. It's already in it from back here. Looking for the target on up a little bit. Here's the high, here's the low. Look at that target up there around 52.50. SYLD. Here's the high, here's the low, entry, target, 72. SYM, well, already getting to the target, 92. THO, here's the high, here's the low, entry, 117. TPH, wow, still got a bunch to go. It grabbed that high. Here's the entry, 35, but I'd probably wait for the entry on up here and go for the 38 target. Tremble, did that little bitty bounce in there. We have this bigger bounce, and we need the close above there to get 89. TWI, and grab that little bounce right there. I would go for the bigger bounce and wait for the entry. UWM. Here's the high, here's the low, there's the entry, 51.60. VB. Here's the high, here's the low, there's the entry, 264. VBR. The high, here's the low, there's the entry, 214. VEL. In it from back here, but there was a bounce right there. New entry, 19 bucks, almost 20 bucks target. Here's the high, here's the low. Looking for 114.90. VLRS. Here's the high, here's the low, there's the entry, and 8 bucks. Careful, 770. And this one bounced without triggering. This went too fast for this algorithm on TradingView. 177 target. B2. Here's the high, here's the low, there's the entry, 103.40. WBS, almost done. Here's the high, here's the low, there's the entry, 64.86. WSBC. Here's the high, here's the low. It's already in it from back here with the target of 34.69. And that's basically the same target. And last but not least, XMMO. Here's the high, here's the low, there's the entry, and 140.66. Bias for the day, well, as long as we can stick the breakout, I want to see NQ confirm the breakout. If NQ can confirm, right now we rejected. I want to see this confirm. If we don't confirm, watch out for that. Remember, tomorrow's a holiday. Market's closed. I won't be here. It's like one of the couple days I take off. I take off Thanksgiving, Christmas, New Year's Day. Otherwise, have a great day, everybody. I'll be back 11:30 with Jack Carter on Market Masters. Links in the description. And I'll see you tomorrow. Same bad time. Or I guess I'll see you Friday. Same bad time, same channel. Hunt for opportunity once again. Thanks for playing in the poll.